So, a common issue that maybe you've experienced in the past when providing liquidity is just trying to determine what type of return you're going to get before you actually commit to deploying your hard-earned capital in a pool. I mean, I'm personally deploying $20,000 per pool these days, and to me, that's a good amount of money. That's not something that I want to essentially deploy with inaccurate data or without being fully informed. So I want to show you how you can actually simulate performance using backtesting mechanisms before you get in. And just to show, over on Uniswap, you can see WBTC shows a 32% APR, but we dive in and we don't have any more data relating to that. Like, for example, what if I go in with a plus 10%, minus 10% range compared to a plus 20%, minus 20%? It simply does not tell us what APR we're going to get based on our range. Now, Orca does a little bit better of a job at this. Like if we were to go into sold USDC and we start to put in our custom range, in this instance, this is minus 3 plus 3, it says we get 700% nearly. If we do minus 10 plus 10, we get roughly 182%. And this is a 365-day yield, but if we hover over it, it says it only uses the fees in the last 24 hours to project this. Meaning if we're simulating on a Sunday, if we're simulating on a Saturday, right, we're factoring in weekend volume, which isn't nearly as relevant as weekday volume. Or if we're simulating when the market's at a peak, right, and the market's hitting all-time highs, well, then there's obviously going to be higher volume in the past 24 hours. So we truly don't know what type of return that we are going to get. Now, we can use Metrix Finance to figure that out. And the best part is the majority of this is free for the simulate functionality. But like, let's just pull up, we'll start with Orca this time over here, the SOL to USDC liquidity pool. So I'm just going to type in SOL and type in USDC. And Metrix Finance has an engine where you can find liquidity pools over here, and you can also track your performance after you deploy your capital into them. But we'll select this one over here, which is the 0.04% fee tier. Now, Metrix is pulling all of this data in real time, and we have a lot of functionality here for this specific pool. But the most important part is the ability to set our range, see the APR, but then also refine our APR calculation. And I'll show you how you can do that in just a second. So let's go ahead and set a min price just over at this 30-day low, and then a max price at this 30-day high. Now, since we are relatively close to the 30-day low, I am going to essentially broaden this a little bit. We're going to bring this down to about 140, and then I'm going to bring this down from 206 to something like 195 or so. That way I can have about 62% of my liquidity in SOL. So it's going to tell you exactly how much of each asset you need. And for further accuracy, we hit match ticks. That's going to find the closest tick to our entered price, which is not 140 to the T, but rather 140.029, blah, blah, blah. And then 195.0073, blah, blah, blah. Now, Metrix shows that we're getting a 278% APR here. But here's where I want to be very, very clear. This APR is only as accurate as you make it. So if you're a beginner in DeFi, you are going to need to listen up right now. Or if you've been in DeFi for a while, but you just don't really understand this stuff, once again, pay attention closely, replay if you need to. But essentially, we need to factor in a specific amount of liquidity so that way we can determine our share of the overall fees. So to further explain on that, right, Metrix Finance is pulling in the average daily fees over the past 30 days in this instance. We need to determine how much of those fees we actually make up for. And we do that by looking at these prices. Over here, you can see on the current tick, there is about $21,300 of liquidity, which means that on this tick, we're getting about a 278% APR because we make up for more of this tick. But if we go to a period where there is higher amounts of liquidity, like over here where there's 44K, that 278% APR is now 131%. Why? Because we make up for less of this tick because there's more liquidity. And our liquidity is distributed evenly. So there's 829 ticks within our range, and we have roughly $1,000, which means that we're doing about $1.20 per tick. And ultimately, if we were to go in with a tighter range, there'd be fewer ticks, more money per tick. That's why we get a higher APR. But also at the same exact time, if we make up for a higher or lower portion of the tick, that's also going to affect our APR. So before we start to look at a couple different pricing options like current price and also the periods where there are higher amounts of liquidity, I want to go down here and look at the volume history. We're showing an average of $320 million per day in volume. Recently, we're doing about 260, 390. Over Friday, we did about 125. So that's relatively in line. But I'm actually going to adjust this to just use the past basically 6 to 7 days. And the reason why is because using the past 6 to 7 days is going to cut out the days where we're doing nearly $1 billion in volume for this pool, because we no longer are nearly doing $1 billion in volume for this pool. So we can adjust this calculation range. So let's do 7 days. And actually, we're going to go out to 8. You can see that's going to factor in since July 25th and show an average of 304 million. This is going to be a more accurate depiction. Now that APR has slightly gone down. Now looking over here at this liquidity distribution chart, you could see right here where there is roughly 21K of liquidity on this tick. We are doing a 263% APR. Over here where there's a little bit more, like 32K, we're doing 172% APR. Now when there's even more, we're doing 120% APR. And then kind of when we're at the peak of liquidity distribution over here, we're doing about a 100% APR. Now in this case scenario, I'm happy with all of those options, right? Those are all very, very good returns. So with that being said, I would go and deploy my capital in this pool, which again, it's going to tell me exactly how much of each asset I need. If I want to deploy more capital, I just type that in, it'll adjust those numbers automatically. Now, if we were to go over to Uniswap, something like ETH to wrap Bitcoin, again, we could do the same exact thing over here, same exact functionality. So once you learn it once, you only have to learn it once. You don't have to learn it for all these separate decentralized exchanges. The beauty is, since every single DEX is different when it comes to their UI, UX, with the data that they provide, Metrix Finance is flat with the data it provides across every single decentralized exchange network. Provides the same exact information for every single DEX that it supports. So looking over here, let's just go ahead and select our range. Once again, we'll start over here at the 30-day high as well as the 30-day low. Very clearly, we can see we're close to going out of range on the downside. So I'm actually going to bring this max price down to something like 39. And then I'm going to start to broaden up over here just till I get about 50-50, which is something reasonable, I think, for a liquidity pool right now. Now this pool has picked up in volume. You can see over Friday, I did about 18 million in volume over this pool. So with that being said, again, I want accurate data. It's very, very unlikely that it's going to sustain this $18 million a day in volume. So rather, I'm going to use, since July 18th or so, I'm just going to use a 14-day calculation range. And the reason why is because that is going to factor in some of the data where we're doing $3 to $4 million per day. Some of the data we're doing, $1.5 to $3 million per day. And then also the recent $18 million day that we had. Now, the other thing that we will do is we will pay attention to liquidity distribution. You could see in this area, we are doing about a 10% APR because there's about 830K of liquidity per price point over here. Whereas when we go over here, we're now doing 52%. So our ideal scenario is maybe the price of this pool goes up a little bit, or in other words, Bitcoin outperforms Ethereum, or Ethereum vastly outperforms Bitcoin to kind of get to these periods over here. But for the time being, if we dive into this pool, we are going to get about a 10% APR. So it's important to understand that. And platforms like Orca, Uniswap, literally every single decentralized exchange, they're not going to allow you to have this visibility on the data. Right? Ultimately, you are just going to see, oh, this is doing a 10% APR, but realistically, a little bit of volatility, and you are now doing more than that. Or you'll be right over here, right to the right of that tick, and it'll be saying you're doing a 50% APR. You dive in and you're curious why you're actually getting 10%. Metrix Finance allows you to have that inside scoop and be able to look very, very granular when it comes to simulating potential performance. Anyways, hope you guys enjoyed today's video. If you did, drop a like, subscribe, notifications turned on, and I'll see you guys later. Peace.